I'm Matt Bouchard with NAREITWeek.com here in New York City for REITWeek 2016, NAREIT's Investor Forum. Joining me for this CEO Spotlight is Bill Meaney, President and CEO of Iron Mountain. Bill, thanks so much for joining us.
Oh, thanks for having me.
Now, Iron Mountain recently completed its acquisition of Recall Holdings. Do you expect any challenges in terms of integrating that acquisition?
No, I think that whilst it's a major acquisition, so we're buying the number 2 in the industry, us, Iron Mountain, being the number 1, it is a quarter of our size. So that and this is something that Iron Mountain has done throughout its life. So besides being an expert in terms of chain of custody and document storage for large corporations, is the other part in our DNA is roll-up. We were built through a series of roll-ups. So I think that we're really looking forward to the opportunity, and we're well engaged in bringing the two companies together.
And can you elaborate a little bit on Iron Mountain's plans to expand its data center business into Northern Virginia?
It's the Northern Virginia market, as you know, is probably the hottest or number 1 data center market in the United States. And we're focused in Manassas, which is really in the heart or the epicenter of that. So we feel very fortunate. We were able to find a site a little over 80 acres, has really good access to both power and communications, and it has very good synergies both in terms of our corporate customers that were looking for us to add capacity in the data center space in Northern Virginia, but also in terms of our growing government business. So we think it's a great site, it's a great opportunity where it has capacity for us to build out 40 megawatts of data center capacity.
And in April, Iron Mountain took a 75% stake in a South African records management company. What opportunities do you see in that market?
The South African opportunity, similar to our data center opportunity, is that in terms of looking at business growth in the future, is we're focusing on those markets or those businesses where we think we can continue to generate more than 10% internal growth rates or growth rates before acquisitions. And so the South African aspect is part of that. It is a fast-growing emerging market. The Middle East and Africa is an area which has been kind of a blank spot in terms of our portfolio. And South Africa is very representative typically in terms of how we've grown in Eastern Europe, Asia Pacific, and also Latin America, where we look at those markets where we think that there's a large records management need that has those kind of high or single low double-digit internal growth rates, and where we think by doing an acquisition there's a path through building a number of roll-ups similar to what we've done in the rest of the world where we can build that into a market-leading position. So South Africa is a case where we bought the number 2, and we have line of sight in terms of how we can do other acquisitions in that market to bundle that together and build a market-leading position in South Africa.
Bill, thank you so much for joining us.
Okay, thank you.
For more from REITweek 2016, be sure to visit REIT.com.